Well, what's happening, options traders? Good morning, everyone. And a question that I get a lot, whether it's in the webinars or from private coaching sessions, is always this relationship between delta and the probability of an option being in the money. And on one hand, yes, you can think of delta as being an approximate measure or the probability that an option is in the money. But there are some very big dangers with this. And I see a lot of traders making assumptions that are just simply not valid based on this definition. So let's take a quick refresher of what delta is. Remember that delta is one of our Greeks. One of the risk measures is typically what we call them for our options. And what delta does is it shows the rate of change of an option's price in relation to the stock's price. Now, technically, this is for a very small change in the stock's price and an immediate change. So you don't want to say, well, if my delta is 0.4, it's always 0.4, or it's going to be 0.4 tomorrow or next week. What that really means is if the stock makes a move right now, is really the way to interpret that. So for example, let's say that the stock is trading at 100, and we're looking at a $100 call trading for 3. And our broker's platform says it has a delta of 0.4. What this means is that if the stock makes a very sudden move, an instantaneous move from 100, let's say, to 101, that's a $1 change in the price. But this $3 option is not going to go to 4. It's not going to pick up that full dollar. Instead, it's going to pick up this percentage of it, delta. It's going to pick up 40% of that change. And so that option, we would expect it to be trading for about $3.40. Now, obviously, the same relationship occurs to the downside. If the stock had instead fallen $1 to 99, that option's not going to fall a full dollar. It's going to move 40% of that, and therefore would lose about 40 cents and would therefore be trading for about 260. So again, a lot of the reason for these mathematical relationships is surrounding the idea that delta is the rough probability for the option to be in the money. But here's where this definition breaks down, and you've got to be so careful. Delta is, first of all, the approximate probability for an option to expire in the money. And the second thing to be aware of is right here in the money. Just because it expires in the money doesn't necessarily mean that you have a profit. So if you bought that $100 call for 3 and the option expires with a value of 1, it was $1 in the money. Yes, it was true. It did expire in the money, but you still lost. So that's the first thing to realize, is that just because you might be making some calculations of it being in the money, that doesn't necessarily mean that we're talking about profits. But there's an even bigger issue, and that is that traders interpret this whole idea of probability to mean that there's a fixed number of possibilities. And in statistics, we sometimes call this a well-behaved distribution. So for instance, if we flip a coin 10 times, this is what we get. So we can see there's a very low probability of getting, let's say, 0 heads, an equally low probability of getting all heads. If we wanted to know the probability of getting, let's say, greater than 7, it would be all of these probabilities right here, added together. If we wanted to know the probability of getting exactly 7, it's the height of this bar. And it's turned out to be almost 12%. So it's very easy to figure out. And this distribution has looked the same since the invention of statistics, and it will never change. That's what we mean by a well-behaved distribution. And if that's true, yes, you can make some very good calculations based on these types of bell curves. What if we instead rolled 3 dice and added up the face-up sides? Now the lowest number we can get is 3, the highest is 18. If we want to know the probability of getting, let's say, 15, right here, the height of this bar, it's almost 5%, about 4.6% of getting a sum of 15. So once again, very easy to do, very stable distributions. But now when we start looking at, let's say, the returns of the S&P 500, we do get something similar to a bell curve. Here are the returns of the SPY from 1993 to the present. We're now in late February of 2021. But look at that, pretty good bell curve. But one thing to notice is look at these little outliers, almost invisible, but that is not a normal curve. There are some possibilities for abnormally large up days and abnormally large down days. Very small probabilities, but they do happen. So that's the first thing to realize. These are what we sometimes call a black swan event, things that you just really shouldn't expect, but they do happen. See, we don't get that with the dice or with flipping coins, but you certainly can get it in the stock market. Now, another problem with this curve is that it is built solely on the day-to-day price changes. So it's not factoring in, let's say, a terrorist attack or a surprise announcement from the Fed or anything like that, which always can happen. See, it's not like we're saying we just have 38 spaces on a roulette wheel or we just have 3 dice that we're dealing with. You can't go back and in a laboratory create this distribution. This is just what has happened in the past, and there's not really any guarantees this is what we're going to see in the future. Now, that doesn't mean this is completely useless. In fact, it gives us some very good insights. But the main thing that you have to be aware of is to always remember this definition of probability. Yes, delta is the approximate probability for an option to expire in the money. That's true, but it's based on a very strong assumption, and that is that the only thing driving a stock's price is volatility. And if you base all of your strategy calculations and potential profitability calculations solely on the probability of delta, you're going to find out the hard way it's not a good assumption. So if you're going to use delta, that's fine. Just understand its limitations. So for anyone who'd like to learn more about the arts and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a brand new technical analysis course, all at optionsatoz.com. Also, please join us on the Facebook trading group, Options A to Z, and you can find a link in the description below.